Hey everybody, Boris. Welcome to the weekly technicals update for September 19th to September 23rd for the majors, euro dollar, dollar yen, and pound dollar, rife with volatility. That's going to be the theme next week as we have a slew of central bank meetings. We have the BOJ, we have the FOMC, of course, on Wednesday, we have the RBNZ, and we have the minutes from the RBA. So it's going to be a massively volatile week for all the currencies. And this week certainly ended with a strong dollar story. We talked about the idea last week how it was all about yields as U.S. yields started to really spike up, and that's provided a lot of strength for the dollar. And of course, as we end up the day today, I'm just going to check the yields as we just to make sure that I'm correct on the move here. And we're still very close to the 1.70 yield basis on a 10-year in a dollar, and that's really helping push it higher. The very hotter than expected CPI numbers today still lending some credibility to the idea that the Fed may have an outside chance of hiking rates next week. I doubt it very much, which is why huge amount of the price action that we're seeing this week could be reversed next week. There's nothing it's almost one of those kind of things where you really can't trust the technicals to give you guidance because you're stepping in front of a landmine as far as all the fundamental risk that's in front of us. But having said this, though, as we're entering into the next week, we certainly see the strength to the dollar as the dominant theme, certainly into the front of the week. And that strength in the dollar is really being exemplified first and foremost, I think, in the euro, which kind of fell off a cliff today. And took out the 1150 support. Actually, yeah, just barely took out the 1150 support. Now it rests very much on the lower edge of that whole very low volatility cluster that we've had for the last week. We'll take a look at the charts in just 1 second. But as euro starts to dive towards that big support level of 111.50, 111, it really creates the downward slope in the whole trade on a technical basis that, if broken, certainly makes the euro much more of a sell than it is a buy at this point. It certainly makes it a sell to rally kind of a trade. Only a break above the 1250, which could, I think, only occur if the Fed is just unambiguously dovish. If they basically come out on Wednesday and say, not only we're not going to raise rates today, but there's no guarantee or not even a strong chance of us raising rates in December. That kind of a blockbuster announcement, which I don't expect, by the way, but everything is possible, of course. Could reverse the whole flow that we saw this week, and that's why all the technicals could reverse themselves to the downside. It's still very much, when you look at the longer-term trades, we'll just take a look at the charts in a minute, a push in terms of which way we go on a longer-term basis. The same story, by the way, is in dollar yen. This kind of hesitancy between the buyers and the sellers is very much evident in dollar yen, which really needs to see 104 break to the upside to cement the uptrend. But a break to the downside, especially a break of the 101.50s, really puts us into a very negative structure that pretty much confirms that the downtrend is still in place. The only thing that's becoming a lot clearer this week was the downward trend in the pound. The pound has had a major reversal today, came into the 130 support level, and is now at this very, very critical juncture. If it breaks the 130, very much on path to test the post-Brexit lows at 128, as the world now is beginning to realize something that we've been talking about for a very long time, that for the last 2 months, basically UK has enjoyed all the benefits of Brexit without any of the responsibilities. What I mean by that is that they've had this low exchange rate. It's suddenly made all of their business utterly competitive. The growth has been pretty good, and they still remain in the European Union and therefore have all the economic benefits of being in the European Union. Now comes the much harder period where they're going to have to negotiate with the Europeans. And there was a lot of news this week that basically said the Europeans are not going to negotiate at all. The strategy of the Eurozone is to essentially make the negotiations so unpleasant for the Brits that they will have no choice but to stay in the Union. In other words, there will be no compromise whatsoever. It's either all in or all out on the negotiating table. And that creates a much more vulnerable position. Today we had the Chancellor of Exchequer in UK suggest that could create a big problem for UK banks, and it's indeed certainly what the market is certainly feeling. So the clearest move here to the downside has been the pound, both fundamentally and technically. And I think that's something that we'll definitely be exploiting more in the week to come. So let's just take a look at the charts. Give me just 1 second to get to them. Just 1 second. So here we are on the charts, and it's very clear how today really broke down the whole low volatility move here. We've been talking about the fact that we've sort of been trading either side of 1200 for a very long time, and today was a sharp break below towards the 1150. This is a big support area now, but the really big support area is this sort of 1150 to 1100 area. That's the key support. A break below that really opens up yet another support at 1050, and then finally the post-Brexit lows at 109.50. The thing about this, though, I think, is that if we break this 1100 support, generally the structure. Let me just get rid of all the lines. The structure becomes much more negative. You can see this very much over here. So we have a series of lower highs, right? That's the dominant trend line to the downside. A break here would really reaffirm that this is the dominant trend line that we're trading. Only a complete reversal and a break back above the 1250 would then give credence to the uptrend that right now today effectively got broken. So today was sort of a break of the uptrend, maybe a trade back up to the 1200 level, and to see at the beginning of the week just how well we can hold over there. But really, we're watching this 1150, watching the breakdown here. That would necessitate, I think, a much stronger and a deeper move to the downside, and potentially a distribution all the way down to test the support on the post-Brexit lows at 109.50. For now, the near-term trade is very much to the downside in the euro. Now, in the yen, the situation isn't quite as clear, but it is definitely an upward bias, although it's a smaller upward bias. The true upward trade here is this 104 break. That's what we need to see. We need to see a move above the 104s right over here to truly cement the fact that this has been a strong bottom with a higher lows and a break back up to the upside. If we can take out the 104s and close here, that would suggest bullish Fed, higher rising yields. I mean, U.S. yields, if they start creeping up towards the 190 to 2% level, at 2% level, we could see dollar yen going all the way up to 109. It really becomes very much a story of what the bond market believes. However, what the bond market believes is really going to be the story of how the currency market is going to behave. Conversely, yet another fake out by all the central banks and another disappointment and another distribution in the yen really puts us into a very negative structure back down to parity. And more importantly, if we come down to parity, what really stands out very sharply from a technical point of view is how strong this downward trend still very much is in place. In other words, if we start breaking down over here, it still suggests that there's further downside action and possibly maybe even down to 95 before the yen cools off. So there's just a tremendous amount of coiled movement here, and I think next week will be the resolution to a lot of that as we come to the all the event risk that we have to deal with. And then last but not least, of course, here's the cable story. The cable story is very clear here. So the failure 3 or 4 times in front of this 135, which was the key support, multi-year support. But it's not just that. What I think is much more troubling is the huge distribution all the way down to the 130. 130 has been a pretty big support level all the way from beginning of August middle of August, actually. I'm sorry, middle of August. And more importantly, if we break down to below the 130s, we're really targeting this 128 lows of, or like 128.50 lows of the post-Brexit lows. And that puts cable very much in play for a much further downward action. I mean, if the Brexit story only gets worse from here, there is no reason why we can't see 120 cable sometime in the near future. So I'm going to be watching these levels very carefully, because a break here really suggests much deeper, much more long-term technical damage to cable than you can possibly imagine. So next week really becomes a fascinating week. Of course, euro to the downside initially, but of course, watch that 1250. If we break 1250 to the upside, that's going to be a big fake out. But a break below the 1100, along with some supporting fundamentals from the Fed, really puts us on path towards testing the lows at 109.50. And conversely, with dollar yen, a break above the 104s and a close above that level really puts us on a path to a full breakout towards the 107s. And with cable, of course, a break to the 128s really opens up the road towards 125 at very minimum in the near term as the Brexit woes just begin to haunt the British pound. So wish you guys the best of luck, the best of trading. Boris, over and out.